Hello traders, welcome to my YouTube channel. My name is André Cardoso. Thank you very much for being here as always. It's a pleasure to share my views with you, specifically with those who are learning process. I believe it's important to get some useful information, and my objective here is to share a strategy, a methodology that I use to trade the markets, and I hope that will help you during your journey of your learning curve and this long journey trying to develop and to create your trading strategy. So unfortunately, I know, and that is normal. I will say that sometimes some of you will not find useful information here for your type of trading or the methodology that you are trying to search for, and for that reason you need to search information elsewhere, because if you don't get that information here, unfortunately you need to search that info elsewhere. But my objective here is to try to share some patterns with you that the market tends to form, and obviously we never know the outcome of those patterns, but we need to understand those patterns will offer us a nice risk-reward opportunity to trade, and we should search for those advanced pattern formations at specific price levels. So for that reason, I will try to share with you my point of views here, and please try to understand this as educational content video. So the objective is not to try to put you inside the market, or to try to force you between commas, obviously, but to force you to push a trade just because there's a pattern there. No, my objective is just to share the methodology, and then I believe that can help, or that may help some of you trying to develop your own strategy. So let's start with some, as usual, I have a list of a few pairs that I do follow on a daily basis that I want to share with you. Let's start with the cable. The cable still trading inside. As you can see, there's a channel here. There's an ascending channel. We can call it a parallel structure. And as we can see, the cable still trading inside this range between this ascending channel, and I will not be surprised to see the market reacting from this trend line support. But we need to wait. There's nothing specifically at this point pushing my interest at this point. So I need to wait for the market to decide. The market has failed that shark pattern that I projected before at 132.13, just by a few points there. So we have already a new daily fractal printed above, or actually a few points below the completion point of the pattern. For those who remember that specific one, as soon as the market starts to recover above this previous structure resistance, so we have here clear resistance and also a neck zone. We have these inverted heads and shoulders here. So at some point, if the market decides to trade higher, we assume the market will actually, if the market breaks above this structure, we assume the market will trade higher. What happens at this point? It was, well, the market has decided to start to form this ascending structure, and it can happen. So we have a neck zone as a resistance, as a trigger point, and a validation point for the pattern. The market actually retested this neck zone right there. So we have a retest of that neck zone, a very fast one, and then we assume the market will start to trade higher. But what happens is the market has searched for the 200 moving average, and it has then later it has started to develop and to form this ascending channel. So for now, and because we're still inside this channel, I believe it makes no sense to try or to create one attempt or to try to move with the market without a clear notion of what comes next. So I believe we should wait for something to happen, and at that point, as soon as the market starts to break or starts to threat that ascending trend line support, I started to project patterns below, of course, because if the market starts to threat the violation of the support level, we may also assume if the price confirms that, and I need to see the market trading below that daily fractal at some point if that happens. But I started to project, okay, if the market decides to break that daily fractal, eventually the market will retest a weekly fractal support, and that will put the price trading very close to the bullish shark pattern between the 161.8 extension and the weekly fractal support. And obviously there's always a chance for direct move towards the 224% Fibonacci extension, which will also complete a bullish shark pattern but extended to that level. But the first level we should pay attention, obviously, the weekly fractal support that may offer some pressure before breaking below, and we can try to create a situation where we say, okay, if the market decides to confirm a violation of the weekly fractal, we are out of this trade, but we can try to assume a small retracement, even if limited to your first target. Usually the default target will put the price trading the 50% Fibonacci retracement, but we can trade it and target the daily fractal with the default target at the previous structure support level. So I will not be surprised to see that happen. And the risk reward is obviously a friendly risk reward, because we assume if the market decides to violate this weekly fractal, the market may sink. Another opportunity may emerge later, if the price decides to sink. And actually, it's not the first time the market will react from the golden Fibonacci extension level, even if, as I said before, even if a limited retracement or a push there or a bounce, I will not be surprised to see later a push below the weekly fractal and a push to those levels below. So weekly fractal is positioned at 126.75 and the 224 at 124.72. So I'm not saying that's what will happen. We need to wait for that to happen. We need to wait for the pattern to form, and then we measure our potential reward for that trade, okay? Which means almost 200 points, but let's say 195 points above our starting point, the completion point of the pattern. So that's our entry point, and based on this reward, we can assume, and because we also know the pattern will invalidate below the weekly fractal, we can assume a small kind of, you can try to create a 1-2 risk reward approach, like 80 points, 100 points as stops. Note that will put your stops between those ranges, so be careful when we need to make some choices between the shark pattern between the 161 and 224. We should pay attention to those two levels, because if the market decides then later to sink and then to bounce, you will be hunted with those stops positioned right there. And obviously, always, if you use a 1-to-1 risk reward, 155, a 1-to-1 risk reward approach, which is a maximum that I always suggest. You never enter the market to lose more than what you expect to win. But if we use a 1-to-1 risk reward in a bullish shark pattern printed at the 161.8 extension, that will put your stops right above the 224. So the basically 38% Fibonacci retracement, it's equivalent to the movement between, obviously it is pure math, no, but it's the same the same range. That being said, you should pay attention with our choices, and eventually if we really want to get involved, we can try to identify the best moment to engage the market as soon as the market starts to print a lower time frame structure here. Even if you need to go into a 5 minutes time frame, the small structure that the price will print, you wait for the breakout above that structure. If the market decides to, let's imagine, a parallel range in a consolidation or a very small range there, we wait for a breakout above that structure. If the market starts to create a wedge, we wait for a breakout of that structure, okay? If somehow the price triggers the pattern and then starts to create a structure, we can try to take advantage of that. And we never know if the price will react accordingly to the expected momentum, or the expected pattern, I'm sorry, or the default expectations for the pattern. That's the right way to say it. It can break above that small wedge and then start to fall again. We never know the outcome. As I said before, we always know where the pattern will invalidate and the default target for the pattern. The tricky thing about the shark pattern between the golden Fibonacci level and the 224% is to identify your risk accordingly to the price structure, the previous structure highs and lows, and try to engage the market at the best moment possible if you want to try the golden Fibonacci. You can also wait for a nice bounce first from the golden Fibonacci extension level, and then, as I said before, try to identify the structure the price will print on a lower time frame and take advantage of that small structure, the breakout of that structure, and target the default target for the shark pattern. But of course, 224% Fibonacci extension, measure your reward, 50% Fib, or the 38% Fibonacci retracement level, and this is the reward for a shark pattern. In this example, using this example, this is the reward for a shark pattern printed at 224% Fibonacci extension. So we will target 270 points, so which offers a much better risk-reward situation to manage. Okay, we can try to establish a 1-2 risk-reward situation here. Kind of, okay, 1-2, I lose $1 for each 2 that I win. Okay, and that will offer us a much friendly risk-reward approach, okay, in my opinion. So, but the idea is to try to identify those patterns, and obviously those patterns are not printed yet, so this is pure speculation, and I use it as an example just for the risk-reward that those patterns may offer you. And usually the pattern will not require a lot to invalidate, so I try to minimize my losses when I trade the shark pattern at 224% Fibonacci extension, because I expected one immediate reaction from that level. And I can also use the 241 as an extreme limit to form the pattern. Okay, I can try to, between those ranges, between that range between the 224 and 241, I can try to get involved inside this Fibonacci range, which allows me to manage my risk differently. So if I try to engage the market inside this range, eventually I will get a much friendly risk-reward approach. So, but this is just one example, and this is the cable and pure speculation. I don't know if that will happen. Actually, we don't care if that will happen, because until there, a lot of other things may happen, and that will force us to change our our perspective. So, but my first approach here is, well, if the market decides to violate this daily fractal, I will consider these highs as a false breakout above this structure, okay? And, well, I will start to search for pressure zones at the weekly fractal, in this case converging with that golden Fibonacci extension level. A bounce from these levels may offer more upside momentum for the cable. So let's move to euro versus dollar. I'm going to a lower time frame here. This is a 1 hour time frame, very similar as the cable, but now as we can see, we're still threatening the violation of this ascending structure, trend line support. I published this chart yesterday on Twitter, saying attention because we are approaching the completion point. Nothing is sure as the market will bounce directly from the 78% fib, so the market actually can print a new low, and that's what is happening at this point. We have a confirmed low oversold, and the market is already trading oversold again. New lows on price with RSI respecting the previous structural lows. That will print a sign of bullish divergence, which which may help the formation of this pattern. So basically what we have at this point, and I said I will not be surprised with a retest of the previous structure support. So yesterday I was saying that to someone who asked what to do from here, and there is always two options. The market will move up or move down, but I was saying I will not be surprised to see a bounce from the 78 and the retest of the previous structure support. 38% Fibonacci 117.80 from these lows. Okay, let me try to correct this and adjust this to the completion point of the pattern. It's a small difference on our targets, 117.75. So that being said, I will not be surprised to see the formation of the bat pattern 117.10 and then 38% fib. What will happen if that ends up being the case? What will happen here? And this is kind of a question that I will answer, obviously. But what we can see here, if that confirms, if the market decides to complete the pattern and then starts to threat these previous structure highs and actually ends up trading higher, I will consider this a false breakout below the previous lows. What I will do from here, I will push my extension tool and I will measure the very last swing low. So the market will complete the pattern at 88% fib, and this is pure speculation, okay? I will measure an extension from the very last swing low. So I'm measuring this very last swing low, and I'm projecting that extension, and I'm searching for an extension of that swing. Okay, so basically we will search for a potential bearish shark pattern here. I will adjust that in a second. Okay, a false breakout below the previous structural lows and a bounce with a violation of the previous structure resistance, and I will start to search for an extension, specifically the 160.8 extension, and that will put the price retesting that previous structure broken support. That will put the price trading the default target for the BAT pattern, the 38% Fibonacci retracement. And actually that will put the price trading very close to the 50% Fibonacci retracement. And since we'll still, we are not, well, we can see a upside momentum during these inside this channel, and eventually it can reinforce that momentum if the price decides to push to the 224% Fibonacci. Second target for the bat pattern, golden Fibonacci retracement level, and the 224% Fibonacci extension. So basically we have again the same golden Fib and 224% Fibonacci extension levels as a bearish shark pattern completion points. Okay, so that's what I will search for if the market decides to bounce from the completion point of this bullish bat pattern. So with new lows, the pattern will complete, and I will search for the 38% Fibonacci retracement as a default target. And because we have this false breakout, we can try to identify the next golden Fibonacci extension level as a potential pressure element, and that may offer you another retracement or another fall. That being said, this is what we have for euro versus dollar. Obviously, the bat pattern, this major bullish bat pattern, will only invalidate below the daily fractal support. So we need to provide some room below accordingly to the default expectations for the pattern, which is nothing more than 65 points. And based on that, we have already, that may help us to identify our limits below the daily fractal. Australian dollar, Aussie, I was expecting the bearish shark pattern at 168 extension, and let's take this example, another one. One first low, one false breakout below, the recover above the resistance. I will search for an extension of this very last swing low. Okay, I search for an extension of this swing, and after the pattern gets formed, I wait for a retracement. So what happens here is, the market has found resistance just a few points below that trend line resistance, that descending trend line resistance, without completing the pattern just by a few points. Then obviously we can identify all this structure, and we can try to identify a trend line support over there and try to take advantage of the short below that structure, because after a long period of consolidation above, we start to see something developing here. Okay, well, that offers a nice opportunity to go short also. For now, I will wait for a reaction from this monthly fractal resistance, which we are approaching again. So as we can see, this is a monthly fractal from December, if I'm not wrong. Let me try to see that on a higher time frame. That is from exactly the last day of last year, 31 December. So this is the monthly fractal resistance acting as a strong support, as we can see. So let's see if the market will actually violate that fractal again, because we have already a daily and a weekly fractal support. So the weekly fractal support was printed last September 25, and the most recent daily support was printed last week. So basically we are approaching again that monthly fractal resistance acting as potential support. Nothing very specific for now. The Kiwi projected as a bearish shark pattern at 168 extension and as a potential edging, actually the right shoulder. The pattern is not formed yet. We need validation for that edging shoulders. So basically we have our left shoulder, the head, with a new weekly fractal there, and I started to project that bearish shark pattern at 168 extension that may form the right shoulder, and obviously we have a few other patterns above and previously shared among our communities. The bearish cipher pattern, which has offered at least the minimum or the default expectation after completed new highs, and a sink into the 224% fib, also a bullish shark pattern, nice movement towards the 50% Fibonacci retracement level, which is the default target for the bullish shark pattern, printing the bearish 5-0 sequence right there. Here we have a bullish 5-0 sequence printed, and as soon as the market prints that pattern, we also expect another retracement and eventually a retest of the previous lows. The market has found some support above that structure, above those lows, but that's what it is. We expect a bullish shark pattern. If targets achieved, we will face that as a bearish 5-0 sequence. That being said, then later a small or a lower time frame inverted edge and shoulders triggered that very fast swing high, and then we have that most recent bearish shark pattern where we are trading now the same bearish 5-0 sequence. We have now the bullish 5-0 sequence. We expect some pressure here, as the market has been showing recently. It suggests, as I said before, it may suggest a retest of the previous highs, but nothing is granted, obviously. And because this may be our right shoulder, I will not be surprised to see more downside momentum for the Kiwi. Let's wait for that to happen. More Australian dollar versus the New Zealand, also approaching the bullish shark pattern at 224. The market has failed the 168 extension right there. I saw that pattern formed at 168 extension, a small pressure there, a few moments of indecision, and then the market has decided to sink again, and we are now inside this very small structure and approaching the 224% Fibonacci extension 105.91. So from there we will expect another bounce, eventually the 38% fib or the default target for the pattern above at 107.43. So this is the default target for the pattern, and as always we never know the outcome and we never know if the price will respect the pattern. So basically that is the 224% Fibonacci extension, and we should target, as a pattern trader, you should target the 50% Fibonacci retracement level, or at least the 38% fib, 100 points above, 50 points below. That's what it is. Okay, maximum 100 points, and that's what you can use. Too much for the pattern, but I accept a one-to-one risk reward approach. Okay, but it's a pattern that, as I said before, it doesn't require a lot to fail, but it will not be a surprise to see the price extending to, let's say, 224, 241. Where are you? 241 and 261.8. Be careful with those levels. It's not the first time. Actually, the 316, it's also Not that I backtest that Fibonacci a lot, but I saw the price extending to the 316. Let me try to show you that. Right there. It's not the first time that we'll see a huge extension to the 316 Fibonacci level and then a bounce. But that's not something that I search for. Usually I search for the pattern completion point between, as I said before, between 161 and 224. But sometimes it will happen. But well, let's not get focused on that, because there's no reason for that. But I saw that happen a few times, and I will not be surprised if the market starts to change. There are a few patterns that starts to adapt to the new environment, and the new traders coming into the markets and trading different methodologies, algorithms also participating and getting involved with all of us. And that being said, the market starts to adapt, and I will not be surprised to see some of those patterns starting to search for different price levels, and eventually we will see that pattern formed at 316 more often in the future. I don't know. Who knows? Let's see. Let's try. Let's adapt to that if that happens. But let's stay focused on this potential bullish shark pattern at 224% Fibonacci extension. That is the level that I believe we should pay attention for. And well, let's see. Bullish shark pattern for the Australian dollar, also approaching the previous structure lows. And look at the very clear example what happened before. 224% fib projected at 109.90. Okay, 241. Double top, broken neck. You have a short. If you want to wait for a retest of that next zone for a confirmation, you can also do that. Basically, this was the structure to search for below that next zone. So as soon as the market closes below that next zone, we wait for that structure to form, and we can assume this as a small range, and as soon as the price breaks below, you have your setup there. Okay, double top after the bearish shark pattern, and eventually we should pay attention for something like that. So let's assume something like this range. Well, inside our limits, I assume. No, the same range the price used above the 224% Fibonacci, which means nothing. Obviously, this is pure. This is just one idea. Okay, this is just my thoughts. So eventually, okay, let me use the same range that you used before, and no more than that. That's inside my limits. Okay, I can use that. Okay. Risk reward, position size, your volume, your number of units, your number of lots, very important to adjust accordingly to the specific pattern that we have and the specific time frame that you have. Okay, so my opinion, bullish shark pattern for the Australian dollar versus the New Zealand, which will imply, or you will suggest a rejection of these previous structural lows. CHF, interesting one. Let's go into a lower time frame. I shared these before. I shared this major bullish alt-bat pattern, the completion point of 113% fib. The price has started to get a bit nervous, and then later it has formed. It has formed this double bottom, and the bullish 2618 then later formed there. For those who don't know about this pattern, there are a few people talking about, well, sharing the variables and the market conditions for that pattern to form. Basically, it's a pattern formed supported by a double bottom or a double top. We wait for the validation above the next zone to validate the double bottom, and then we wait for a retracement to the golden Fibonacci 61.8 retracement level. From there, we assume the market will then may print an ABCD pattern, a symmetrical projection that we assume the market will trade and will print. And from there, obviously, after an ABCD pattern, we expect a 3 waves minimum correction. That's not the case because, as we can see here, there's a huge sequence of events here for the dollar versus the Switzerland franc. That being said, we are now trading and facing again the 200% Fibonacci extension, which is the default target for that double bottom, that technical double bottom printer here. So this is nothing more than a projection of this structure above. Okay, we have our double bottom trading again the 200% Fibonacci extension level and just a few points above, so it requires a new high, at least. The 88% Fibonacci retracement level, so this is a minor or an internal bearish bat pattern. Everything can happen from here. I can see the price respecting the pattern. I can see the price using and breaking above, using the 113% Fibonacci extension, very close to the golden Fibonacci major retracement level that will print the alt bat pattern there. And I will not be surprised because the market is already threatening the violation of the most recent descending structure. I will not be surprised to see a rejection of this structure again, and then pushing into new highs above that daily fractal and even above these highs from October. Okay, this is the crab pattern extended above. So, but first of all, daily fractal resistance, bearish bat pattern, which requires a new high above the most recent one. If that happens, and again we will face the same thing again. We have one first low, one first high. The market will be pushed above to print the pattern, and if the market decides to fall below these lows, again we will use an extension and we will extend the very last swing high, and we will search for the potential bullish shark pattern. 161, 224, we wait for that to happen, we observe, and if necessary, we take actions. Okay, we don't think, we react accordingly to the pattern the market offers. We don't start to think, oh, the market goes there, I will try, I will think, I will readapt, I will move my, no, I will put my stops here, but then I will move them a few points above. Nothing of that will happen. Trading advanced patterns, you know where the pattern gets completed, we wait for that pattern to form, if that is the case. And this, again, this is pure speculation, this is pure nonsense. It's the same as starting to project patterns for the next year. It makes no sense, okay? I'm just saying, if the market decides to print that bearish bat pattern, and obviously we wait for a retracement, we wait for a retracement to the default target, the 38% fib, so that will not violate the previous structural lows, okay? We need to see that bearish bat pattern trading the golden Fibonacci, which is the second target for the pattern, the default second target for the pattern. If the market if the market decides to retrace to that Fibonacci level, that will confirm those or this high, okay, as a false breakout above this one. And if that happens, I will start to project patterns below. But first things first, the completion of the pattern, the retracement, and as soon as the price approaches this level, we start to identify those potential sharp patterns below, and eventually new lows. It will not be a surprise, and one approach again to the monthly and weekly fractal position below. So that being said, let's wait and see. As I said before, nothing is granted. I'm not saying the market will respect this daily fractal, but at some point, if the market decides to starts to retrace and starts to trade around those levels, you should pay attention to those patterns actually below. Okay, attention with the violation of the daily fractal and the bearish crab pattern above. More. Canadian dollar also approaching the bearish sharp pattern at 161. I projected this pattern before, actually as soon as the price violates this descending channel, so I projected the pattern above, converging with the so bearish sharp pattern, the gray one, or let me change this color, the red one, and those blue lines representing the bearish crab pattern, both using the same extension, the extension of the same move to identify the completion point, which is the same golden Fibonacci extension level, taking into consideration that the crab pattern will not be pushed above. That will fail with the crab pattern, so we expect actually a strong reaction from this golden Fibonacci level, because we have that convergence between those patterns at 133.69. As always, put your Fibonacci retracement there, your default target 38 or 50% Fibonacci retracement. In this case, as you can see, completely converging with those daily and most recent 4 hours fractal resistance, which is now positioned here, and the most recent support is already there. So this is the daily fractal resistance, which may act as support. Okay, it needs to make sense. You need to see, well, why the price should retrace from here. There's no reason for that to happen. Why not? Retesting the previous structure resistance, and then you may see more upside momentum. Nothing is granted, as I said before, but it makes pure sense. The market will retrace, retest the previous daily fractal resistance as a support, will reinforce that area as a support level, and eventually we'll see more upside momentum. That's one of the reasons why I said before, attention, because it's not the first time the market will then later search for the 224% Fibonacci extension. If the market fails to go there directly, and it can happen, also go directly to those levels and above the weekly fractal, that will depend. And we have the elections right there, so careful with pushing trades during this environment. Golden Fibonacci, we expect a retracement and eventually more upside momentum later. Attention with the default target for the pattern, which is the default 50% Fibonacci retracement and not the 38, but we have the 38 converging with that structure, so we need to pay attention to those levels. So at some point it makes sense to see, okay, those ratios synced with the previous structure support levels or resistance levels. It makes sense, okay? And for those who understand, who already understand the price action, and let me just try to push. Every time the price violates a previous structure highs or resistance, as we used to call it, later the market tends to retest this structure for a specific period of time, and eventually a touch and run event. The market will offer you a retest of this structure, and eventually it will trade above it. Okay, and the price actually can show you that the price will always retest the previous structural lows. Eventually will not nail it, it will approach those levels, but that's how the market tends to work. The market will violate the previous structure and it will retest the previous structure highs or lows, and then more upside momentum. Okay, so but taking that into consideration, we need to try to put those, or to search for those advanced pattern formations converging with the price structure. And if that makes sense for you, it will make you more let's say more comfortable when trading a specific strategy. If you already understand, okay, if it makes sense, if you put all pieces together, you know, it starts to make sense, and well, you can use that in our advantage in order to feel more confident, and specifically to avoid those bad emotional reactions. Oh, I don't know what to do, I will move my stops, but then the market tends to trade against me, or I will remove my stops, and then I will let it go, and then I will put my stops again, and then the market reverses again against you, and you adjust your stops, and you decide to jump out of your trade because you are tired. And then the price finally starts to move in the direction that you expected earlier, and you don't have the patience to wait, because actually you don't know what to do with the market. But if you understand the pattern, if you understand the risk limits for that specific pattern and where the pattern invalidates, it turns things much easier. And if you are able to search for those patterns converging with price action in a price structure, even better, actually, with the price structure, not the price action. So that being said, and as usual, I tend to extend my approaches a little bit, and I'm sorry for that, because I know people requires videos more with less time. So, and sometimes I like to, well, that is what it is. Norwegian krone, I was expecting actually nice rally here for the Norwegian krone. Well, I was expecting that potential butterfly pattern at 127 extension, and the eventual extension to the golden Fibonacci there, but well, never happened. And in fact, let's pick this. What we have here? Let's pick this again. We have the previous structural lows. The same exercise I made before. Extension tool. $161 to 24. Let's see. Let's remove this butterfly from here. 224% Fibonacci extension. Retracement. What I will search for, 88% Fib. Do we have a golden Fibonacci here acting as resistance? Question. No. 88% Fibonacci retracement, major bearish bat pattern projected very close to this bearish shark pattern. That is my price. 88% Fib. What is this? This is an extension of this very last swing also. Exactly. We have this, an extension of this swing, which is the one that provides a daily support. Okay, we have a new low there, then a new higher low, the price rallying. This is an impulsive momentum here. Attention with that. Attention with the patterns that you search for when the price starts to create an impulsive swing. That's why I'm searching for this 224% Fibonacci extension, and I'm searching for potential convergence between this major bearish bat pattern. Okay, that is what it is. Price 224. Default targets retracement from the 224% Fibonacci targets. Default target minimum 38% Fib. Let's measure that. 1.8% below. Okay, 1.8% above maximum risk reward. Maximum risk reward approach. One to risk reward approach. That's what it is. Bearish shark pattern, which may converge with that major bearish bat pattern at 88% Fib. It's important to respect this weekly fractal. As soon as the market violates that structure, that previous structure highs, that's a signal that there is an intentional behavior to push the price higher. The probability for that to happen will increase, and we don't need to stay inside that trade anymore. Even if the price decides to pull back, there was a clear sign, there was an intentional close above that fractal, that resistance, which means eventually at some point the market will trade even higher. And we don't need to remain and holding our short and praying for the gods who don't understand nothing about finances or economy or money. So don't pray for the markets, because you will lose. Mexican peso, another one, nice one, that I pushed, and I'm already approaching my default targets, but we are also approaching the 224% Fibonacci extension right here. As I showed you before, we can use the 241, so I will expect the market to target that 38% Fibonacci retracement level, which is the default target for that major bullish pattern. I projected that pattern before the completion point and look what happened from there. It's important to respect the starting point of the pattern, as always. 88% Fibonacci retracement, completing the pattern, and then look at this horrible structure, all that threatening your patience. If you don't respect the previous structure lows, during these swings, you will enter and exit your trade at least 3 or 4 times. So that being said, respect the previous structural lows, trigger your pattern, and wait for something to happen. The price will invalidate your pattern, or the market will target your default initial expectations. Don't be surprised with some pressure as soon as the market approaches the default target, because we are also threatening the monthly fractal support from June. Okay. More dollar versus yen, head and shoulders. We are now approaching the weekly fractal support, previous structure lows. 200% Fibonacci extension, default target for the head and shoulders printed above. Richard also shared before the violation of the structure. Actually, I shared the potential for these head and shoulders as soon as I saw this very first swing, and then later the market reinforced that neck zone. Actually, wrong. I started to project that potential head and shoulders as soon as I identified this false breakout below. I started to project that shark pattern above. $161.8 extension. The market ends up not trading there, and let me just confirm that, because I always like to confirm things. Dollar versus yen. Exactly. This was our left shoulder, and as soon as the market prints these lows, I started to project patterns above, and obviously we need to wait for that to happen. If that happens, we will see the formation of, or at least the eventual formation of that pattern. Now, will it recover? Because if that recovers, if the dollar versus yen starts to recover, we may see an approach to that daily fractal again. At this point, it's not. It makes no sense, obviously, to project those patterns there. But if this acts as a false breakout below, attention with the recover above that previous structure highs. These highs, let me try to point at 105 and 105. So if the price decides to recover above, we have that golden fib, and we need to assume these lows as the most recent ones. So if the price decides to trade below the weekly fractal, eventually we need to adjust that pattern. But for now, nothing very specific. We are now approaching the weekly fractal. Be very careful. Be very careful with this. In my opinion, we should have one inverted cup and handle. No? one eventual cup and handle, and let me identify those projections. That's a huge fall. It's a huge fall for the dollar versus yen if the market decides to create that cup and handle there. Well, let's see what will happen. Eventually, if dollar versus the yen decides to bounce from this price zone, I will not be surprised to see then later the violation, if the price decides to bounce from here, and later if the price decides to break below that weekly fractal, that may work as the inverted cup and handle. And well, this is the magnitude of the potential fall for that pattern for dollar versus yen. Let's observe that one. Well, euro versus the yen, much more constructive at this point. Actually, we have a few patterns printed before, and we are now approaching the 161.8 extension, golden Fibonacci extension level, the bullish crab pattern. Same exercise as always, completion point, default targets projected above, measure your default target, 121 points, which makes this as a 60 points stop loss below, as a 1-2 risk reward approach. That's what it is. Bullish crab pattern for euro versus the yen, approaching the completion point. The pound versus the yen, I need to wait some indecision here around the daily fractal support. The ratios are pointing into this potential bullish bat pattern, and the eventual retest of this weekly fractal support. And if that happens, we may see the same thing for the pound versus the yen. If the price decides to print this as a potential cup and handle, we expect a bounce, and then later the violation of that fractal support may offer more downside momentum. Australian dollar versus the yen, also approaching a bullish shark pattern completion point, projected at 72.93, 224% fib. Same exercise as always, completion point, default targets 50%, previous structure support converging with the 38, we can use the 38, 137, 140, 70 points, that's your limits. 1-2 risk reward approach. More, New Zealand versus the yen, now trading below the daily fractal. I have no patterns projected here. We have a major eventual heads and shoulders, which may put the price trading at 65.48 below the weekly fractal support. We need to wait for a violation of that structure. An extension of the very last swing high from this consolidation period to the golden Fibonacci will put the price trading a 38% fib, or very close to that level. okay? But first of all, we need to see a violation of this weekly fractal support. This is the crab pattern projected at the 38% fib. Huge room for a fall for the New Zealand versus the yen long term. CAD versus the yen, also trading the 113% Fibonacci extension. I projected this as a bullish bat pattern at 88% fib. It has been used, it was used as resistance. Right there, the price traded below and then used the completion point as resistance, as a signal for more bearish momentum when that happens. If the price decides to recover above that critical Fibonacci zone or price zone, the market tends to search for new lows later. Now we are trading the 113% Fibonacci extension, which is the very last opportunity to recover the weekly fractal support. If the price fails to recover from here or from near this zone or very close to this price zone, you need to see a clear bounce from this zone. If the price fails, we will see an extension below of that proportional, something like 76.99, a violation of this previous structure support level. Okay, and of course, if that happens, the market may develop, may form a different structure here if the price starts to approach or to trade below the 113. So let's pay attention to this potential descending channel. Nothing is granted. I'm not saying if the market fails here it will definitely search for the 161. It tends to. If the market fails the bat pattern or the halt bat pattern, the market tends to search for an extension below, but I don't know for sure if the market will this time search for those levels. If the market decides to touch those levels and to approach those levels, we observe and we take a reaction according to the default expectation for the pattern. Now, let's wait and see what the market will offer from there. 113% fib. Euro versus the New Zealand. I saw the violation of this structure and I started to project patterns below. We have also the 200% Fibonacci extension, which is the default target for, let me see, actually I need to adjust this. Let me just see one. Let me check this chart. Euro versus the New Zealand. Okay. I cleared some stuff here. I saw this as a potential head and shoulders here. Okay, I saw this as a potential head and shoulders, and I projected the default target for that pattern at 173.51, the 200% Fibonacci extension there. Actually, I have an alert there. Well, we have a new fractal support right there. Let me adjust this. Fractal support and the most recent resistance was printed there already. So basically, we're still threatening the weekly fractal, the major fractal, the weekly fractal support, and we are now threatening the recovery above this ascending channel support trend line. So I believe if the market decides actually to confirm that, we may see more upside on momentum. But until there, I still believe this is just a test or a retest of this ascending trend line support, and I will assume at some point the market will be forced to trade lower. If that happens, if the market decides to approach those levels, we have also, of course, another pattern there. The 168 extension from this very last swing high. So an extension of this swing projected below. Okay, the 168 extension from that very last swing high projected below, bullish shark pattern completion point converging with that default projection for the heads and shoulders. Now, of course, as I said before, let's say recovering above the 200 moving average will increase the probability for more upside momentum. Until there, if the market remains below, I believe there's room for more downside momentum, unless if the price starts to recover above those shoulders highs. If the price decides to trade above, eventually it will form different patterns later. So objectively, nothing very specific, just that edge and shoulders that we need to see if the price will correspond to the default expected momentum. Euro versus the Australian dollar, I need to wait now, nothing specific here. Actually, let me just measure one extension here. I need an extension of this structure, this first swing low. I need to search for the 127. So I'm searching for an extension of this first swing. Then we have a retracement and new lows. A three-wave structure. I will search for the 78% Fibonacci. Why? Some of you may ask. Bearish cipher completion point, 78% Fibonacci retracement level, 167.49. So that will complete the bearish cipher pattern. Default targets 38% Fibonacci. Same exercise. What we will short? We will short for 100 points. This is my default target, which requires 50 points. Let's measure a one-to-one risk reward. Can we use a one-to-one risk reward here? Of course not. We will not respect the starting point of the pattern. Suggestion: one-to-one risk reward maximum, very close to the previous structure highs. We need to decide what to do. Do we trade this? We don't trade. We stay away. That we can participate. We will decrease our position size, our volume, or we stay away and we search for a different opportunity. We need to know how to answer all those questions already if you are already trading the market. Does it make sense to put your capital at risk so close to that fractal resistance? Euro versus the pound, I don't know what to do. I have projected already a dozen of patterns during this period, none of them completed, so I'm completely outside of this pair. I need to wait for a violation of this weekly fractal or below, or above the daily resistance above. Until there, I don't even care about that euro versus the pound. Completely nonsense. This is the pound versus the Australian dollar. I projected that bearish crab pattern above. The market didn't form that pattern and it has started to fall. And then later, based on these false breakout above, I started to project that sharp patterns below. It didn't form those patterns, and then later it has created this kind of a descending wedge, which we can see it as a different structure. Also, we can see this as kind of an expanding structure at the bottom. So as soon as the market violates these previous structure highs, it has started to trade even higher. So we're still trading a bullish sequence and a bullish momentum, and now I need to adjust this channel, and let's wait and see what will happen from here. We are approaching the previous structure high, so let's stay tuned. The same way I projected those cup and handles, those inverted cup and handles. Let's wait and see if the market decides to approach that fractal resistance and then create our handle, which will then later, which may be triggered above the fractal. So if the market decides to violate this resistance, eventually it will trigger the cup and handle. The pound versus the New Zealand, I need to increase the time frame from this one. I was expecting, actually I'm not expecting nothing. I was just projecting a few patterns above and below those fractals. And for now, we don't have nothing. We're still trading between the range, between this daily fractal resistance and support levels. We need a clear definition of what will happen. Again, I will not be surprised to see, again, kind of a retest of the previous highs, which may print the cup and handle. I will not ignore a fall from those levels. I don't know what will happen. For now, we see that the 200 moving average holding those lows. So let's assume the market will at least retest these previous structure highs. I don't know. Assuming that is not a sign that I will push a trade. I will assume as an outsider, I sit above my hands and I watch the price action. If the price decides to approach those levels, that may print the cup and handle. If the price decides later to retrace and then to trigger the pattern above the daily and weekly fractal. Well, that completes my insights or my approaches for the Forex market, at least for those pairs that I used to follow on a daily basis. And this is a Dixie. Let's go into the Dixie. Dixie projected at 88% Fibonacci retracement level at 93.73. We are already approaching that level, so let's not get surprised with that bearish bat pattern completed at 93.73. And same exercise as always, default targets 0.5% below. We don't expect huge rallies or huge falls for those patterns. We have default targets for those patterns. Later, if the market decides to maximize our profits, we can manage and we will manage our trades accordingly. For now, initial reward, which will help us to identify our initial limits. 0.51 maximum. 0.25 1-to-1 risk reward. 0.3 more than enough. That's what it is. Bearish bat pattern above the daily fractal. I believe the market will trade even higher and it will retest the monthly fractal support once again. It has been retested one time and eventually it will be retested again if that happens. For now, we are approaching that bearish bat pattern completion point, very similar to the euro versus dollar. Gold, nothing to say at this point, absolutely nothing. I need to readjust the lower time frame, my lower time frame charts, but let me show you where do I have my, let me search for a specific chart for the gold. Where are you? No, this is silver. I want weekly chart on gold, please. Where are you? Well, I don't have my weekly chart on gold. Why? Well, I published this pattern before, and yesterday I deleted all my analysis on a lower time frame because they didn't work. I needed to readapt to that most recent fall, and let me show you what we have here. 113% Fibonacci extension, my friends. We have a major outback pattern completed right there. I will not be surprised to see gold trading 1681, and if that happens, that will offer you a very interesting opportunity to buy more gold. Well, I will not be surprised to see that major fall for the gold. So basically 1679. So this is a 38% Fibonacci retracement, and it represents nothing more than, I published this pattern once formed, that represents nothing more than 17% fall on gold. I will not be surprised to see it happening. And if you go into silver, 224% Fibonacci extension, very sharp pattern printed there, and the default target for the sharp pattern, it's a 50% Fibonacci retracement level, 2075, and that will put the price actually trading very close to the previous structure highs, and actually exactly. So I will not be surprised to see that happening for silver too. Of course, the market tends to print some lower time frame events, and well, we can try to take some advantage from some of them, but ultimately the price will fall into those lows. This is the crude oil. I was expecting from this golden Fibonacci extension a retracement to the 38% Fib, the 3115. This is a daily time frame chart, but if you go into a 2 hours time frame, we are already trading actually the 224% Fibonacci extension. So this is, well, the market has failed the 161 right there. I entered, I bought a small portion of the crude in order to try to go higher from here actually, but then the market immediately invalidating my longs, and now we are trading now the 224% Fibonacci extension. But I still believe, and let me delete this. Actually, I don't want to delete the pattern. Let me just hide it from the higher time frames. If you go into a daily, let me delete this. We are trading the 23% Fibonacci retracement level. So, but basically I will wait for the 38% Fibonacci retracement to be reached, 3115. So I will not be surprised with that. S&P, I showed before that potential bearish cipher pattern at 78% fib. The market has then later has recovered that 78% fib, and we are now well, sinking below that 78% Fibonacci retracement, another one, and approaching. Eventually we will retest that weekly fractal right there. Nothing is granted. 113% Fibonacci retracement extension there. Right above, the market has found some pressure. Ultimately 38% Fibonacci retracement right there. And if that happens, that may confirm this as a potential double top, which may put the price trading even lower. S&P, equities, the DAX, a few patterns there, heads and shoulders, bearish, sharp pattern there. Well, what happened then? We are sinking into this golden Fibonacci extension level, and actually the 38% Fibonacci extension, default target for that bearish bat pattern printed above, 38% Fibonacci retracement level. And even the heads and shoulders reinforcing the idea for more downside momentum. And this completes my presentation today with Bitcoin and Ethereum. I have Bitcoin with a bearish crab pattern projected at 14103. 103, and I have the Ethereum with the bearish, but this one I'm not so sure about it. Let's wait and see, but as a potential bearish bat pattern at 468. Let's see how the market will behave there. Well, dear traders, I hope you enjoyed this presentation. I hope you take some advantage from the ratios and the variables for those patterns, and they tend to offer you a very interesting and friendly risk-reward approach, and let's wait for that to happen. Let me just, by the way, adjust some of those levels for euro versus dollar, which is now threatening the 88% Fibonacci retracement level. There's nothing wrong with that. It will be wrong if the price trades below that previous structure support. That's what we don't want. Okay, so I hope you enjoyed this presentation. I hope you take some advantage from some of the information that you get here, and well, if you're not able to do that, you need to search other sources. Thank you very much for being here. I will try to publish and to update some of those charts later. Stay tuned, subscribe in order to get notifications when I publish some of those videos if you want. And all the best for you and for your families. Stay well and wealthy. Good luck to everyone.